All right, first chart we're going to take a look at here is the VIX. The VIX is the volatility index, S&P 500 index. What this one measures is the fear in the market. How much fear is there in the market? As this thing goes up, there's more fear in the market. As you can see, we've been heading up quite a bit here over the last few months. Ever since the beginning of the year, we really started taking that turn up. So even long before the war in Iran started, we started moving up in the VIX. So the market was going to be headed down. The market is the inverse reaction to the VIX, right? So if the VIX is going up, the S&P 500 is most likely going down. 9 out of 10 times, probably 9.5 out of 10 times, the market is going down if the VIX is going up, and vice versa. So if the VIX is coming down, like you see this big red candle, then the market is going to be going up, right? So you can usually measure that side by side, but I wanted to pay attention to this. Most importantly, we've been talking about the 25, 23 level. We need to see the VIX get back below that before we can start to see any kind of upward motion in the market. Right now, this level is what we're watching, 23. Right now, we're sitting at 30. 30 is a very big relative high. As you can see, this is the highest candle we've had since the war started, and also all the way back to tariff day before now. And you see there's very few times we even get to this level or higher. Very few, right? This is COVID, right? That was one, obvious. And then this was the world financial crisis back in 2008 when the market crashed and was down for 2 years. We're looking at monthly candles here. So each candle here represents 1 month, and you can see we're there multi-months. But this is a very rare occurrence, right? If I slide on back, you'll see even the dot-com crash back here in 2002, and then back here in 1998. We didn't really even stay up there that long for that one, and that was before the world financial crisis. That was the biggest crash at the time, right? So the VIX, we just want to keep an eye on it. We don't trade it, but we want to monitor it to see which way it's going. It helps to give us some direction and some guidance as far as what we're seeing. Whenever I see the VIX at 30, I start thinking bullish, honestly, because as you saw, we don't stay this high, and when we start coming down, just like I said, it's the inverse relationship of the S&P 500. So if the VIX starts coming down off of 30, as you see it did here, and you see it did here, then you're gonna start to see upward movement in the market. So let's jump right into the next chart, and we're gonna talk about the various levels we need to watch in the market, in the S&P 500, the DIA, the QQQs, and gold and silver, and we're going to get right on into it. All right.